Hello everybody, this is Lara with your weekly video for oil for the week ending Friday 21st of October 2022. I am recording this after New York has changed, so I have final volume data and hopefully stock charts don't change it retrospectively. Occasionally that does happen. I'll have to go with what I have now just after 6 p.m. Eastern Standard Time. Overlapping continues. Prices moved lower this week. Support remains about 85. I am still expecting for oil a bounce to overall continue. It's probably going to continue to be choppy and overlapping. It could make a new high above the March 2022 high at 129.44, and I will expect it to continue overall for some weeks. I'm changing the degree of labelling for the main wave count within cycle 2 this week. The wave count sees a huge bear marker over here, a double zigzag labelled Supercycle Wave 2, where 2 ends, 3 begins. Supercycle 3 may only subdivide as an impulse, and its cycle degree that will be labelled 1, 2, 3, 4, 5. I expect 1 is over and 2 may be continuing as a zigzag. I will label the zigzag now into primary A, primary B and an extending primary C with intermediate 1, intermediate 2 incomplete and then 3, 4, 5 to move lower. I will expect cycle 2 to quite likely end and find support about the upper edge of this channel, which is copied over from the monthly chart. Elliott wave is fractal. If you haven't viewed monthly charts already, I provide a link at the start of every week's analysis. Click through that link, you'll see text, charts and video with monthly chart analysis. Primary C may only subdivide as a 5-wave motive structure. Let's take a look at how it may be starting at the daily chart level. This high here of primary wave B, this point here, primary wave C may be subdividing as an impulse. The only other structure would be an ending diagonal. Within a diagonal, subwaves 1, 2, 3, 4 and 5 must all subdivide as zigzags. Within an impulse, waves 1, 3 and 5 must be 5-wave structures. And so if intermediate 1 is a 5-wave structure, a leading contracting diagonal, then that tells us primary C should be subdividing as an impulse. And wave 1 may be complete, wave 2 may be incomplete, and then it needs 3, 4, 5. Following a leading diagonal in a first wave position, the following second wave correction is commonly very deep, and so the 0.618 Fibonacci ratio of intermediate wave 1 at 109.18 would be a reasonable expectation. If it doesn't end there, that may not be high enough. The target for intermediate 2 to end remains the same. At 109.18 it would reach the 0.618 Fibonacci ratio of intermediate 1, and at 107.4, quite close to that, minor C would reach 2.618, the length of minor A. Intermediate 2 may be subdividing as an expanded flat. They are labelled A, B, C, and they subdivide 3, 3, 5. Within an expanded flat, the B wave moves beyond the start of wave A. Here, minor B is a 1.79 length of minor A. That's a bit longer than the common range, but still well within an allowable guideline of up to 2 times the length of A. C would be extremely likely to move beyond the end of A, at least to avoid a truncation and a very rare running flat. I've changed the labelling of minor wave C this week from this low to this high. This upward movement looks like possibly a completed zigzag. If that's a zigzag, then minor C may be completing as an ending diagonal, with a zigzag for 1 and 2. Within an ending diagonal, all of the subwaves 1, 2, 3, 4 and 5 may only subdivide as zigzags. If 2 continues lower, it may not move beyond the start of 1 below 76.26. At the weekly chart level, this is an alternate wave count. It considers another structural possibility for cycle 2. It could be unfolding as a flat correction. Flat corrections are labelled A, B, C, and they subdivide 3, 3, 5. Primary A could have been over down here as a double zigzag. Let's take a look at this at the daily chart level, where the high of X within primary A, this point here. A waves within flat corrections must subdivide as corrective structures. The only structure an A wave within a flat may not subdivide as in its entirety is a triangle. They are most commonly zigzags, but they can also be multiple zigzags or combinations or flat corrections. Primary A may be over here as a double zigzag. Primary B, within a flat correction of cycle 2, must retrace a minimum 90% the length of A. That would be achieved at 124.12. The common range for a B wave within a flat is from 1 to 1.38 the length of wave A, giving us an expected range for this wave count from 129.44 to 149.65. There should be something off or wrong about B waves. If we do see a new high at or above 129.44 for oil, then for this wave count it should come with weakness. There should be bearish divergence, weakness in volume, and indication of weakness possibly in ATR declining as well. When B is over, we would know what kind of flat might be unfolding for cycle 2, and I could use the ratio between A and C to calculate a target for primary C. Can't do that yet. These two alternate wave counts indicate the issue with oil at the moment. It's in a corrective structure. It's in a correction. Let's go back to the first weekly chart. For several weeks now, this has been the most difficult of all the markets I've been analysing. This movement up here and down here is choppy and overlapping, so hard to analyse, and that's typical behaviour of price during a correction or a consolidation. And so I have at least a little bit of confidence that this is a corrective movement, a counter trend movement, but I expect if it is indeed at cycle degree, then it's got a ways to go. As cycle wave 2 continues to unfold, I will probably have to relabel at least parts of it. It'll be choppy and overlapping, difficult to analyse. Let's take a look at classic analysis this week. I'll rely on this more heavily when price is in a corrective structure. After this pullback, after this downward movement here, there's a morning doji star. The second green candlestick particularly had some push from volume, and so at the weekly chart level this is bullish. This completed week here is bearish but not particularly so, and now another week closes as a small green doji, downward movement, reduced range, very small real body, and somewhat close to even upper and lower wicks, but the lower wicks slightly longer. So this represents a balance of bulls and bears, indecision in the market. A little bit of an increase in volume. We'll look at that at the daily chart level because it's a doji. We need to look inside the week to determine the short-term volume profile. At the end of the week, support about 85 is holding. There's resistance about 93. On balance volume, the last signal it gave was bearish. It has no new range and no new signal. ADX is still declining. There's no clear trend at the weekly chart level. RSI, money flow and stochastics all in neutral territory, and ATR continuing to decline as price moves slowly lower. Here's the last week of downward movement. A bearish movement here ending in strong volume. An inside week, a green candlestick with a slight decline in volume, an upward candlestick here with a bearish upper wick, a slight decline in volume, and now a downward candlestick for Friday, a further decline in volume for a doji. Overall price falling of its own weight just here. For the very short term, that looks a little bit bullish. Support at 85 holding at the close on Friday. On balance volume, broke above resistance, and it made new highs prior to price. As price is making highs here, the corresponding point between price and on balance volume, on balance volume is making higher highs, price is failing to make corresponding highs. This divergence is bullish from on balance volume. ADX declining, there's no clear trend at the daily chart level either. RSI, money flow and stochastics all neutral. So price is swinging from resistance to support and back again. There's a downward swing. Stochastics hasn't quite reached oversold. Price is moving lower, but support about 85 is holding. Further support below there about 77, 78, around about this prior swing low. That's all from me with your oil analysis this week. I hope everyone's looking forward to an awesome weekend.